for now, I simply want to introduce you to the euro-dollar weekly chart. The euro-dollar on the weekly chart has one thing in particular right now that I'm paying attention to. Here's what's happening. The currency pair bounced off the 800 simple moving average and was ridiculously oversold. It was oversold for weeks. Weeks on end, this currency pair was oversold, and it's just coming out of oversold on a stochastic oscillator that's measured 30-10-10. These green candles here turn green when the currency pair goes oversold and stay like that until it comes out of oversold. It is now trying to reach up for 34.90. That's the 62 exponential moving average on the weekly chart. It does not have to get there. It doesn't have to get there. If it continues to break highs, that's where it's going. That's most likely where it wants to go if it continues to break those highs. Those highs are 32.61. It's 80 pips lower than that right now, so there's no emergency movement necessary on the currency pair right now. But that 36.50, 36.60 area is an important area and zone of support and resistance. And you're going to want to pay attention to the 34.89, 34.90 mark. If it breaks above 36, 32.70, let's say. It's an amazing rebound for a currency pair that everyone left for dead. And it's good for me because I'm holding on to like 1,000 euros from the ITC from years ago. So I'm in cash on the euro, and I would very much like it to see it go up. That's the weekly view. There isn't anything long term if it goes down. There's nothing protecting this. If it goes back down, there's nothing protecting this pair in the long big picture. If it falls again, it's probably going to fall all the way to retest the lows that it made this year already, and the 800 simple moving average on the weekly chart. All right, that's the weekly chart. Let's look at the daily chart and get a big, not as big of a picture view of the pair. On the daily chart, the story is much different. On the daily chart, we're now overbought, and the currency pair is reaching up to hit or nearly touch the 200 simple moving average. That's the blue level on the chart in front of us. We don't even really need this level of resistance up here because we're right here, right now, and we are overbought, and the currency pair probably will reach up to hit the 200 simple moving average. It's probably going to do that. Is it a trade that I would recommend that you take, up to 3,300? Well, it's tough at this point to start trading it because it probably will, and it's likely to come back down before it does any of the things that we've talked about in the last update on the weekly chart. Before it does any of those things, it's likely to move around a bit. Now, it can jump up today and then come back down and so forth, but it's really not the time for me to be planning buy trades on the longer term for a bigger move. It's just not the right time for me. If you look at this currency pair in terms of the daily and weekly chart, what strikes me is there's a conflict. On the weekly chart, it looks like it needs to go up more to hit that 62 exponential moving average on the weekly chart. On the daily chart, though, it looks like it's time for a rest. It looks like it needs to pull back a bit. And that conflict is hard to resolve by looking at the long-term charts by themselves. Not about fundamentals for me, although we're going to talk about fundamentals as well. It's not just about that. It's about the fact that the currency pair has trouble stretching past levels that are statistically unlikely to be hit. That's the issue for me. So I'm going to go down one. I'm going to go down to the 4-hour chart with you. And I'm going to say, just like I said before, the currency pair looks like it needs to continue moving upward in terms of technical targets. That seems rational. The trend is positively upward on the 4-hour chart right now. I mean, the recent trend. But I want to talk to you a little bit about the Arizona rules, and I want to talk to you a little bit about these moving averages and share with you some reasons why. The trend isn't all the way up for me just quite yet, And a reversal back down right now is in the cards. All right. This is the blue 200 simple moving average. This is the red 62 exponential moving average. And this is the black and white 800 simple moving averages. These three simple moving averages are the Arizona rules for me. These are a set of moving averages that comprise a way of looking at the market that I have depended on for 3-4 years now, at least. When the currency pair reaches the 800 simple moving average, I call that the Tucson phase of the market. It's a phase of the market when the currency pair has reached equilibrium or reached the 800 simple moving average, which is home base, on any time frame chart, and is likely to range back and forth at that time. It's likely to spin around the 800 simple moving average and decide what to do afterwards. When the currency pair reaches the 800 simple moving average and begins, and the 62 exponential moving average lifts up above it like this, so that the 62 is above the 800 and the 200 simple moving average is below, I call that the Flagstaff phase. That's a phase that's close to Tucson, not, geographically if you live in Arizona, and not in terms of temperature if you live in Arizona. But these two phases are very closely related. These two phases reflect ranging market behavior when the currency pair is likely to move back and forth around the 800 simple moving average and is less likely to continue the strong move that got it to the 800 simple moving average. What that means for me right now is, despite the fact that I have targets above on the euro dollar, I'm looking at targets below on the euro dollar right now. That's what I'm looking for. I'm definitely looking for the currency pair to relax, come back down off these highs, and retest the 800 simple moving average on the 4-hour chart. You have multiple areas where the currency pair went overbought. You have, I got all kinds of levels on here. You have multiple levels recently where the currency pair went overbought and then never went oversold. The last time on the 4-hour chart that the currency pair was oversold was back in mid-June. That's a long time ago. That's quite some time ago. So I'm looking for a repeat of that type of move to retest the 800 simple moving average. Like I've said, I think there's room for it to go up, and I think it probably will use that room. But right now, I'm looking for the currency pair in the shorter term to retest the, let's say, 3,000 level, 3,020, 1.320. Let's just put that number right on there.